Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So if you're looking at the options, you're going to see that the volatility in the Aussie is going to be the highest. Right now, that's about 21%. We measured that on an annualized percentage basis. But it's interesting to know that last August, all the ISE pairs were trading somewhere between 8 to 10. And that's, well, we didn't know it at the time. Last August, there was a lot of complacency in the markets. The highest volatility was, as I said, the Australian, followed by the Japanese yen. What's interesting, Jack, and I don't know if I mentioned this to you, but the options volatility in 1997-98 and in 2008, the dollar-yen actually peaked at that same volatility, about 37-38%.
Interesting.
So that's sort of an interesting, everybody looks at VIX. I would highly recommend you start to take a look at the foreign currency option volatilities, because that would have been a great guide of, you're never really sure. It's not going to call it 100%, but, you could have seen that, well, 37, 38 vol is pretty high, and maybe if you had a view on any of the dollar-yen, you'd probably want to use a spread or something else, because the volatility is very, very high at that point. You'd want to know that. So that's really real. It's very, very important to understand. And even right now, the two highest volatilities are the Australian dollar and the Canadian dollar, and I think for obvious reasons that Jack just pointed out, commodity currencies. Let's see if we have any other questions before we have some closing comments from Jack.
There's some good questions there. Steve, for you, where can you find those volatilities on the options?
Oh, great. You can go to our website, www.ise.com/FX. You can go there and you can look at the last couple months. There's a free website called iVolatility.com that I like to go to, because our website's great, but we don't have 52-week ranges, which I sort of like. And you can go, and they just want your email address, so you don't have to pay them, but you have to sign up. You have to give them an email address, and you can get the ISE pairs, and you can they even have charts on the 52-week chart, which I find at least interesting. When you're trading the options, I'm not saying you have to be a volatility junkie, but you really should understand where the history is, so you know where you're getting in. If you're buying an option at a 52-week high, you need to understand there's more risk there, and you may want to do something else. Right now, as I said, we're probably in the mean of the high and the low, so what does that mean? I don't know, but at least we're not really high or really low right now. We're sort of in the middle there. Did you see anything else, Jack?
Yeah, I did. There's a good question there by Scott, and I want to answer because it's an important one. Why does borrowing the low-yielding currency, for example, the yen, cause its value to drop? Well, the reason is, in this case, from the carry trade standpoint, you're borrowing the low-yielding currency, and then you're converting it into another currency of choice to reinvest those assets in somewhere else that's higher yielding. So in case of the yen, to borrow the yen, you're putting up the collateral or whatever to borrow the yen, but then when you make that conversion, you're basically selling the yen against another currency. So when you sell something, you're putting, obviously, selling pressure, the price tends to go down. So that's the reason, because you're converting it into another currency after you borrow it. That's why it tends to put pressure on it to go lower.
Let me just I'll just mention that. www.ivolatility.com, ivolatility.com. Jack, there was a question here. Let me see. I think William wanted to know how you play these, as far as, do you just buy calls and puts? Do you get more creative? I think you've mentioned it in the past, but maybe William hasn't been part of some of those webinars. Do you mind just talking about how you look at these?
Yeah, I mean, we tend to keep it very simple. I'm not an options pro like Steve is. I mean, Steve is a real pro. I mean, he knows all the strategies and knows the risk and opportunities of the different strategies. I'm a currency person, and I tend to use them in our services in a very simple way. We use them as just leverage bets, either long or short against a currency, meaning if we want to play a currency against the dollar that we think is either going to go up or down, we'll either buy a put or buy a call. That's the way we do use them. But we do sometimes use them, synthetically. You can create some of these, meaning if you think the yen is going to go down and the Australian dollar is going to go up, you can buy an Australian dollar put in the FX, and you can buy a Japanese yen call. So you can kind of do these a little bit synthetically. It's not as efficient, but if your time frame is out there, it can be a good way. You in the spot market, you would do a cross trade. You would buy the Aussie against the Japanese yen. You would buy that cross, hoping the yen goes down in value and the Aussie goes up. You can do this synthetically, still by staying long, buying a put and buying a call using the FX options. And of course, if you think the emerging market's going to break and then the yen's going to appreciate or something, or the dollar, we happen to think the dollar's playing that role now, but let's stick to the yen again. If we think that the carry trade's going to come unwound and the emerging markets are going to break, then we would buy a call on U.S. dollar Aussie and buy a put on U.S. dollar yen to try and synthetically play that if our time frame's right. So we've done that in the past.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.